This is Mark with Right Line Trading, and this is our evening newsletter, beginning with this disclaimer that all signals and trading opportunities that we provide are for demonstration and educational purposes only. Participating in trading in the markets involves substantial risk, and it should be understood that a person can lose a substantial amount of money. Always carefully consider your financial position prior to making a trade, and never risk more than you can afford to lose. Now, what I wanted to do is really take a close look at Boeing. Now, we're looking at a 15-minute chart of Boeing going back 90 days. And you can see that if we traded Boeing, now this is the full system software, which I rarely project. And you can see here there was a scanner signal right here to get us in short right here. And this was just an absolute stellar opportunity to ride Boeing all the way down for almost 25 to 28 bucks. You got recurrent scanner signal short, another series of signals short, signals short. Every retracement was met with an additional scanner signal short, short, short. Then the predisposition of the market changed. And right here is where we had an opportunity to catch a nice move long. But what's in the cards? Now, we hold Boeing long in our options portfolio. So we have to know, where do we think that Boeing is going to go over a much longer term haul. You can see it would have been a lot better if we took sequential shorter options positions. In fact, we could have made a huge number of bucks on Boeing to the downside, and then really nice money on options on Boeing to the upside. But where are we headed out into the future? Now, if we look at options activity today, there were 10 trades classified as unusual options activity. 27.27% of the investors opened trades with bullish expectations, and 72.73% of the UOA was opened by investors with bearish expectations. In terms of cost, there were $126,260 in puts purchased and $4.3 million in calls purchased. Now, just because a call is purchased does not make the position bullish. It may be that the call was sold and it was cash secured, or part of a bearish spread. But obviously, the number of calls far outstripped the number of puts. But the intention of traders was heavily towards the bearish side. So our anticipation moving forward is that we're very likely to see a roll of Boeing back to the downside. Now, I hope this doesn't happen, but we've got a lot of big money betting that it is going to. Now, I was able to pull up one price target, and if I can find it here, Wells Fargo has still set a price target of 254. So I think that we're in a bit of a precarious position with Boeing. Now, there have been lots of unusual options activity. Unusual options activity on 617, 827, 817, 827, 827, and it's been all over the place. Bearish, bullish, bearish, neutral, bearish, but today overwhelmingly bearish. So I think that options traders are pretty certain that we're going to see a roll to the downside. Now, it may be heralded here by the multi-time frame alignment and trend to the downside, which has turned red even though price is above the 50 and our C2 indicator is green. That is not a good sign. You can also see that our Laguerre oscillator has now dropped down, telling us that price is accelerating to the downside. And we're getting our scanner firing short signals, telling us to take this instrument short. So we could have made a tremendous amount of money sequentially or just ridden Boeing all the way down for almost 25 to 30 bucks and then ridden it back up on shorter term options positions. Now that we're stuck in a longer term bullish position, we're just going to have to see. Our software imbalance is still telling us long, but we got a mixed bag here. Options traders are telling us that they anticipate a move to the downside. We shall see. If I was sitting on the sidelines, I would stay away from Boeing right now, given the fact that the technicals and UOA do not align. Everyone have a wonderful evening, and I look forward to talking with you tomorrow.